Hey everybody, what's going on? Welcome back to Third Wave Trades. Again, another update video for you guys on GameStop, ticker symbol GME. The last video I did for you guys was on Wednesday. We were waiting for the Thursday shareholders meeting. As you guys all know, that got canceled due to technical issues. And now it's scheduled for Monday, I believe, at 11 a.m. So I was going to do an update, but I was like, you know what, let me just wait till over the weekend because I had a feeling that there wasn't going to be too much of a difference in the price action between Thursday and Friday after they kind of took away that catalyst. So kind of just delays, in my opinion, the move that's about to come. We'll get into all that. What I think is about to actually play out should be a pretty massive rally next week, in my opinion. But again, we'll see how that plays out. So that's what we're going to do. We're going to go over the Elliott wave count, the larger wave count, get into a little bit more of a zoomed in micro wave count. And then after that, I want to show you guys what I think is playing out with the accumulation schematic, where we are right now, the Wyckoff method, just to show you guys in all aspects of technical analysis, in my opinion, this is showing that it's primed for a massive rally this week. I don't want to say this week, actually. Let me take that back because time is a very difficult indicator, but soon, in my opinion, very soon. All right, so we'll get into all that. All right, so first things first, guys, disclaimer: I'm not a financial advisor. This is not financial advice. Please do your own due diligence and research and/or consult with a financial advisor before making any trading or investment decisions. Secondly, guys, if you could, please smash the like button. Please subscribe to the channel. Please share the video with as many people as you can, and please hit the bell notification icon if you guys want to get more updates whenever my videos come out. All right. All that being said, let's get straight into the video. Okay, so first thing we're going to look at is the Elliott wave count, and I have over here drawn out for you guys the kind of like the larger picture of what I think is going to play out. Don't pay attention to any of the prices. I just threw the numbers out here. We're not necessarily going to any of these numbers. It's just more for illustrative purposes to help you guys visualize how the wave count should play out, right? So essentially we have this first wave that happened back in May 14th? And then, so we had a large first wave, second wave, and now we're in this third wave, which is going to be made up of obviously a subwave of itself, right? So the red count is the larger picture that's going to play out, obviously with peaks and valleys along the way, which are going to be the subwave counts, right? So if you want to picture that, you can picture that as like this, right? So we have this, the red is the 5-wave move, the larger 5-wave move that is going to play out, and we are in this third wave, right, from of that move, right? So now within that third wave, we are in this green wave, right? And the green wave, we had the first wave over here that was made up of and the first wave was an expanding diagonal. We had our second wave pullback, and now we are in the third wave of this green wave. All right, I'm doing this, guys, to try to help you guys visualize what is playing out, right? So basically, it's a spring that's so coiled up, and it's going to release, and the release usually comes in the middle, right? So when you get these 1-2 buildups, right? It's just building up for a massive rally, and that's going to be somewhere here in the middle, right? When you get the third wave of the third wave of the third wave of the third wave, etc., right? So that's basically what we are looking for. This is where the massive move is going to be, where you'll see the peak of the move, in my opinion, based off of the technicals. I'm not talking about anything else that could play out in terms of like, the larger narrative with hedge funds and all that stuff. Just what the technicals are showing us, that this is going to be the most impulsive move that is coming, right? So if this was our large degree first wave, then this third wave, which is made up all of these subwaves, should be at least 161.8% of this first wave, right? And I say at least because I think it's going to be a lot more. So you see 161.8% of this first wave would take us to $117. But keep in mind, you have third waves within the third wave, within the third wave as well. So this actually becomes much larger. I wouldn't be surprised if this third wave turned out to be this level right here, 423% of the first wave move, which would take us to like $275. Again, don't hold me to these numbers right now. All that remains to be seen depending on how these waves play out. But as of right now, all things being said, like at the very least, we're definitely hitting $100 in my opinion, based off of the Elliott wave count. All right, and with a lot more room for us to go even further. So that's kind of like the big picture, right? We're in the third wave, this third red wave. Within the third red wave, we are in the third green wave. And I really think that within the third green wave, we're going to zoom into this part right here. We are, if not yet, we are going to be in the third of this purple wave, right? So like the peak move is coming, in my opinion, very, very soon. All right, so that's the larger picture. And now let's kind of like zoom into the most recent price action between like Wednesday, Thursday, and Friday. All right, guys, so now I'm zoomed into the price action from last week. All right, so after the live stream by Roaring Kitty, the Friday before that, right, we dropped all the way over here. We filled this gap, and then we kind of rebounded on Tuesday morning, right? So we hit this low of around 22.77. That becomes our point of invalidation. And then as you can see, we had this 5-wave impulsive move to the upside. That was basically on my last update for you guys on Wednesday. We kind of went over this. We said this was the top of our first wave, and we had the bottom right around here, which was our second wave. So far, that's holding true. So we had this 1, 2, and now we're looking for a third wave. Obviously, the third wave is going to be made up of 5 waves as well. So Thursday, we saw a little bit of a rally. I'm not going to lie, the price action was very choppy. Even for this being an impulsive wave, it's a very choppy impulsive wave, right? So you had a leading diagonal for your first. You had a very, very choppy second wave, which looks like it's a expanded flat, where the B wave was made up of a triangle. You had a nice third impulsive wave. You had a zigzag for wave 4, and then you ended with an ending diagonal as well, right? Where the fifth wave was actually truncated, did not pass the top of the third wave. It's rare, but it happens. So then that becomes our first wave. And then on Friday, we basically just got the beginning of our second wave correction, right? So we had this move down here, and I think it's just the A wave over here, 1, 2, 3, 4, 5. This was our B wave when we had that little bit of rally midday. And then you can see after hours, we kind of just, after the day ended, we kind of just went sideways for a little bit. So what I'm expecting is for this C wave to finish on Monday, which could take some time, might take the whole day. It just depends on how fast it moves. It might actually happen in the pre-market, where we see a little bit of a dip in the pre-market, and then maybe once the shareholder meeting starts at 11, I believe it is, on Monday, then that's when we see the new move to the upside, right? So let's kind of go over what those numbers could look like. So if this is our first wave, our A wave rather, and that's our B wave, we're looking for it to go to at the very least, a 61.8% move, which would be 27.91. But you kind of want to see it break or the level that A had. So I'm thinking more so around this level, from 27.36 to around 26.66. Should be the end of our C wave. And that's assuming that this wasn't the entire correction, which I wouldn't bet on it being the entire correction, because there's a very quick correction then compared to this move. So I'm more so looking at this being 5 waves down, right? That's our A, this is our B, and then this is our C, something like this, some kind of like choppy move to finish off this correction before we go back to the upside, right? So again, this could happen pre-market Monday, could happen in the opening hours. It could just be like one of those quick spike moves, right? You know, like you see when the market opens, you have like, especially like Monday mornings, as soon as the market opens, you have that quick spike down, and then the candles just like going crazy both directions. It might just be something like that. You just see a spike down just to hit the level. Once we hit the level, then we start the move up, right? And that's going to kind of play into the next thing that I'm going to show you guys, which is the accumulation schematic. But just so we're clear on what's playing out over here with the wave count, right? Our point of invalidation now for the entire move is going to be 2271, right? Because this forms our first wave. This is what is the second wave, but if we break this point of invalidation, doesn't mean that the move is done yet, right? Because this could just end up having been a larger corrective move, right? This could have been an A somewhere over here, B, and then we get a C that comes somewhere down here. I don't think that's the case, but if we break this, it's not the end of the world. But as of right now, this looks like this was our completed correction. We had another first wave up. We're finishing this orange wave down now, right? So you can see right here. So this is the picture kind of in the more immediate count. First wave, second wave, we're in the third wave of our purple, and once we complete this second wave in the orange, assuming it's not completed already, we should be in the third wave of the orange, right? So then we're gonna be in the third of third, and that should be a pretty massive rally, right? So if we do the projection for that, right, let's say it comes down to around that $26 range that I was talking about. We're looking for at least, I would say, a move to 36, but I think it would be slightly more impulsive than that. I think we're looking at this 2 to 261.8% move, right? So I'm looking for it to run to around $40, like $38 to $42 for this third wave move. Then obviously you have another fourth wave retracement, and then another push up with the fifth wave, and then that would complete our purple third, and then obviously third and fourth, and you know, we'll get that series of 3, 4s, whatever. But that's kind of the immediate picture right now, right? So look for this to finish, and then we would get, right, so get this A, B, C, and then you get the massive third wave, fourth, fifth to complete the purple, third wave, and then another pullback, right? So that's kind of the picture for now. Hopefully that is clear. Again, the point of invalidation would be 2480 first. If we break that, then the point of invalidation would be 2277. So in terms of, again, a strategic play, wait for this C wave to correct, get in as low as you can over here, close to the point of invalidation, go long from here, and then use the point of invalidation as a stop loss. So if you could get in at $24, $25, that's a great entry, and then you would only be risking very, very nominal amount. Right? So a good entry would be, if you would go in here somewhere, right? This is why third wave moves are so profitable, because if you get in at the right time, which is basically the bottom of a second wave move, then this is what you're risking and this is what your reward would be, right? Assuming the third wave goes to what we project, right, to 161 to 261% of the first wave. Basically, you would get in at the start of the second wave, you would use the point of invalidation as your stop loss, and you would just let this play. So that's kind of like the third wave move right there. Again, not financial advice, just letting you know how I would play it in terms of an Elliott Wave move, right? Wait for the second wave to complete, go long, use the point of invalidation as my stop loss, which is roughly 24.79, and take profit somewhere around that level if we get there. If I get stopped out, then, you know, back to the drawing board. So that's how that works. All right, so hopefully that's clear. If you guys got any questions, let me know in the comment section. There's one more thing that I want to go over, kind of a larger picture, just to show you basically, to kind of confirm the Elliott wave count also, right? Which is basically saying that we're getting into that third of our third move, which is where the impulsive move really begins. So I want to show you that, guys, on now in the Wyckoff accumulation schematic, right? So the last time we had this massive rally move, which was 2 Thursdays ago, right, in the after hours, where we ran all the way up to around $67. That came after this accumulation schematic over here, which you guys can see I labeled as accumulation schematic number 1. And I'll show you guys what that looks like. Basically what that has is that has a spring move in it, in our phase C or whatever. I mean, I guess you could actually argue that this is also an accumulation schematic number 2. It wasn't that deep of a spring, so the point is basically we had an accumulation right here, and you can see once we broke out of it, out of that top of the channel, we had that massive push. Same thing over here. We had a small accumulation over here, and that led to this push, right? So now we are getting another massive accumulation. So if this accumulation right here led to this push, you can only imagine what this push would be once we get out of this, right? So this is the same price action we just covered in Elliott Wave. Now I'm kind of showing it to you in the Wyckoff accumulation schematic. So we had our selling climax, right, followed by an automatic rally, and then a secondary test in phase A, right? In our B phase, we had another secondary test, right, as a sign of weakness, secondary test as a sign of strength, an upthrust move, another secondary test, not hitting the lows over here, which is pretty significant, right? It shows buyer strength, and then kind of just like meandering within this channel. And I believe now we're in phase C. So now this part is usually where the accumulation schematic gets very, this is the important part of the accumulation schematic, right? Phase A, you kind of have your change of, your slowing down of the downtrend, right? And then you kind of, in phase B, you get your change of character and kind of a series of tests to see where we stand, right? Are buyers stronger or are sellers stronger? As of right now, it looks like buyers are stronger. We're holding more towards the top of the channel. We had that upthrust move. In phase C, this is usually where you get B test, right? So either if sellers want to make one last attempt at trying to shake paper hands or dumb money out of their positions, they will push this down, right? They will try to fake you out and try to push it as low as they can, which is called a shakeout or a spring move, right? So they're going to try to shake out the paper hands. And the second you get fearful and you sell, or your stop losses trigger, then all of a sudden you see this massive rally come back up. All right, so this is what I'm talking about. So in an accumulation schematic, right, you have your selling climax, like we just saw. You have your automatic rally, secondary test in phase A. Phase B, you kind of have your change of character right here, and you have a secondary test as well in phase B. And basically it's just a series of tests to see who's in control, buyers or sellers, right? Once we kind of determine who's in control, which is, you know, in an accumulation schematic, it's buyers are in control. What will happen is that once you get into phase C, you will have the test, right, which is called spring move again, or the shakeout, terminal shakeout, whatever you want to call it. And once that happens, you kind of what they'll do is again try to shake out dumb money or paper hands into getting rid of their positions. And then when you sell over here, when your stop losses hit, then that's when smart money loads up, and in phase D you have this sign of strength, and basically the move is now starting, right? So this is again where smart money gets in, and then this is kind of like where everybody else gets in, right? This is where we see the sign of strength. This is where we see the change of character, and then you form your last point of supports, and you start to go higher in phase E. All right, so that's accumulation schematic number one. And accumulation schematic number two is actually very similar. So the only difference between the two is that accumulation schematic number two doesn't really have that spring move. So that makes it a little bit harder to read, right? When you see that spring move, you know what's coming next, right? As long as you break back into that channel, right? The spring move takes you out of the channel, and then you come back into it. You kind of know what's happening. You see the volume increase and all that. You know you're pushing back up. Accumulation schematic number two is a little bit harder to read, especially in real time, because there's no massive spring move. And really what that means is that sellers are basically all out of ammo over here. Buying strength is so strong that they can't even make that last attempt for a shakeout. And so there's no telltale sign. The spring is basically your telltale sign that phase C is finished and now we can go higher in phase D. So without that, it's hard to tell in real time, but I think that is what is playing out right now. I'm not expecting a spring move, but if it happens, it happens. But I'm not expecting that based off of the Elliott Wave analysis, right? So using both forms of analysis kind of helps me understand where we are and what to expect. So if we were to get a spring move, that would kind of destroy the Elliott wave count, right? So it would cross my point of invalidation. That's why I'm not leaning towards that. That's why what I'm leaning towards is this accumulation schematic number two. And it tells me, it makes sense from a logical perspective if we're gearing up for a massive rally, right, in the Elliott wave count. It would tell me that buyers are in control, right? So I don't think that there's that much selling left. We have the catalyst on Monday with the shareholder meeting. Everything again is lining up for this massive rally. So this is what I'm expecting. I'm not expecting a spring move. If it happens, okay, that's fine. I would just be looking to get a better entry somewhere around here, but I'm not expecting it. What I am expecting is for same thing for us to just kind of just meander, I guess, over here in our phase C, right? Just kind of like meander, maybe push down a little bit, but stay within the channel overall, right? Not basically break this and get this spring move and then come back up. I'm kind of just expecting us to maybe dip a little bit, stay in the channel, but then start to look for the volume to pick up and for us to test the top of the channel, break out, come back, consolidate somewhere around here, and then push higher outside of the channel in phase E, right? Again, all this kind of lines up with the Elliott wave count as well, right? It's kind of what we just went over. Over here was our 1, 2, 3, 4, 5. That was our purple wave. This was so that made our first, our second, and then this is kind of what we just went over. So 1, 2 right here. And then it would set us up for this third wave move. So it's kind of like, I'm using confluence of both forms of analysis, and they're kind of lining up, they're making a lot of sense. This accumulation could basically lead to another massive rally just like this accumulation did, right? And we saw the wave count makes sense so far, 1, 2, 1, 2, and we could have a massive third wave, which lines up with our phase D, and then eventually our phase E in the accumulation schematic. So yeah, everything's looking good from a technical analysis standpoint. And then obviously, the outside events, the shareholder meeting, the Roaring Kitty, all the hype. I really expect FOMO to kick in. I expect buyers to come in with large positions and big money to really step in and just really drive this thing a lot higher. So I don't know if it'll happen Monday when the shareholder meeting happens. I don't know if it'll happen Tuesday, like we basically get some more consolidating over here. The phase C ends up going a little bit longer. The timing aspect is hard to tell, but when it's happening, you'll know, right? Because you'll start to see you'll see those larger candles, right? You'll see larger candles going higher, right? No matter what time frame you're looking at, hourly, 45 minutes. If you're zoomed in on a 5-minute chart, you'll see stronger candles, and you're going to see the volume pick up as well. And as you know, that's basically your indication that we're starting to get into this phase D right here. So I'm excited. I'm really excited for next week. I think it's going to be huge. I have a position, and I'm probably going to add to my position depending on what I see Monday morning pre-market. But you know, again, none of this is financial advice, guys. This is just me trying to show you guys my technical analysis, and if it helps you guys, then you know, I'm glad that it helps. Yeah, that's really all I got. So I know this video is a little bit longer, but I figured it's the weekend. People have time to kind of intake this video. I'm trying to give you guys a strong thesis based off of the technicals why I think this is going to make a massive rally. So again, just to recap, then the wave count is very strong. Wave count looks really good. We're getting into a third of our third, and you know, the channel is third wave trades. That's what I trade. And then the accumulation schematic is matching up with that, right? So accumulation, rally, right? Now another accumulation, a larger accumulation, larger rally, right? That's kind of like the takeaway of everything that I've been saying. So with that being said, guys, if you like the video, please hit the like button. Please subscribe to the channel for more videos like this. Please share it with as many people as you can. And yeah, I'll be back with more. I will try to do an AMC video. I've seen some people request an AMC video. So keep an eye out for that, right? You know, in summary, I think AMC is going to run with GameStop as a sympathy play. I think GameStop is the main driver, but I do think AMC will run just because the two stocks are tied so much. So it will move in sympathy, but I will do a technical analysis video on AMC in terms of its wave count and things like that as well. All right, so again, guys, please like, subscribe, all that good stuff. Thanks for watching. I'll be back with more. Peace.